said, I'm Dave Lehman from Church Asset Management. We are an agency out of Missouri, but we have agents kind of throughout the nation, and have insurance in pretty much every state, except one of your home state is Hawaii. I don't have a church insured in Hawaii, but yeah, I sold my first church in 1993. And we weren't specializing in churches at that time. I was mostly selling auto and home, and happened to insure a pastor, and he asked me if I could do it. And I researched it, and, we are a faith-based agency, and man, it was something that we decided that we're going to start specializing in. So now, some 4,500 churches later, it's probably 90% of what we do. And I know many of you have insured a home, or some have insured a business and insured property before, and have some knowledge. So some of this may be redundant. Insuring a church is a little bit different, and there's some options and some pitfalls. And I'm just gonna review today how we believe your congregation should be insured. Some options that you have, some pluses and minuses of those. And I know you're from various states, and there's some state specific questions that I don't mind answering those during the Q&A as well. Insuring a church building, there's the very first option that we like to talk about is there's an option of replacement cost or actual cash value. So right when you speak with an agent or ourselves, that'll be the first option. We typically recommend replacement cost, which means no depreciation is considered for your building. It will be built brand new. Depreciation won't be considered. Where actual cash value, it does consider depreciation, to where if lightning or hail damages your roof, and it's a 30-year-old or a 20-year-old roof, and it's got about a 30-year life expectancy, on an actual cash value policy, they'll come out and they'll say, well, you only had about 30% of your roof left. Instead of getting a full, $50,000 roof, you're only going to get a portion of that because, the life expectancy was so short, where a replacement cost policy comes out and gives you an entirely brand new roof. And that's the same for your contents. As I go through, hundreds and hundreds of churches, it seems like it's a typical in the youth room, there might be a donated couch that might be worth $50. Where not an actual cash value policy, they're going to give you $50. On a replacement cost policy, they go out and buy you a brand new couch. So old items will replace with brand new ones. So that's kind of the first. Then there's 3 causes of loss forms. You can write a policy on basic, broad, or special. Basic and broad tell you what is covered. A basic policy, I have it here in front of me, that they'll insure you for fire, lightning, explosion, wind, smoke. A broad policy will add things like breakage of glass or weight of snow and ice, where you want to make sure that you write it on special form. Special form states that everything is covered except what is excluded. And I know that's kind of you're thinking, well, that's kind of a funny language, but unless it's specifically excluded, it's covered. And things that could be excluded, earthquake can be excluded. Well, it is excluded, that we have to add on separately. Intentional acts can't be covered. You can't go burn your own, church down or your own building down, and that would be arson, things like that. But special form is just the best and broadest way of writing your property. So you want to make sure you have replacement cost and that it is on special form.
So special is different than broad and different than basic?
Yes. So basic and broad list the exact perils that are covered. Okay. So where if, there's water damage, for instance, an adjuster will come out and he has to determine why is this water here? We have to find what peril covered that loss. Was it vandalism? Because vandalism is covered on broad form. Was it caused by wind or hail? Where a special form, there's water damage. Water damage is cut. It's not excluded, so therefore it's covered. So it's just the best and broadest way of writing an insurance policy.
Hey, Dave,
now, Doug,
may I interrupt? You want me to pull your?
Yeah, I was just going to say, if you could pull up the, this is a typical way that we would come out and present a property policy to you. And not all agents do the 2 columns. Some agents will just give you what they're offering. I like to show you what you currently have to the best of my ability, compared to what is being offered. So you can see right off the bat that we're talking about the main building. And if you have multiple buildings, you might have a youth center, you might have a parsonage, or other buildings that would be listed here. So the first thing you notice is that we're talking about a proposed building value. So I wanted to explain a little bit, how is a replacement cost of your building even determined? Insurance carriers don't create their replacement cost system. There's a few different companies that specialize in this. We use a company called Beck, and most companies do, that takes into account your specific, obviously your specific square footage, your specific construction type, whether that be frame or joisted masonry or masonry non-combustible, or there's fire resistive. Takes into account the type of construction, then the cost of labor and materials in your area. It's adjusted each year according to our losses. And we get pretty detailed with your specific risk to come up with what we believe it would cost to rebuild your building brand new at today's costs. So this is not to be mistaken with market value. I run into this a lot of times on a parsonage where, they bought the parsonage for, let's say, $125,000. So they have a loan on it, maybe from Doug, and they, so you need to show proof of insurance to at least cover the loan. And so let's say you have a loan of 100,000, so you want coverage for 100,000. Well, and then we come out and we do a replacement cost on it, and man, our replacement cost came up that was actually 160,000. And sometimes boards will raise their hand and have issue with this. So this isn't market value, and it could go either way. There's also been times where I'll insure a home for, let's just stay with the same thing, 140,000, and they say, oh, well, my gosh, we could sell this for 300,000. Sometimes market value, because of location or whatnot, it could be quite a bit higher than the actual replacement cost. So, you want to make sure that you have an agent that you trust, that you believe is doing an accurate job of determining your replacement costs, and not just matching up what you have. Because you'll be tempted to say to an agent, hey, we want an apples to apples comparison, and we insure this building for 672,000. We want a quote for 672,000. And you can see in this sample, I say sample, this is a true presentation. I just took the church's name off, but our replacement cost came up just a little bit higher at 701,000. So very, very similar, but it was just a bit higher. Contents, if you had 20 people walk through your church, you'd probably get 20 different answers of how much contents you have or what that should be valued at. Companies have different practices ranging from 10 to 18% typically of the building value as kind of a standard or a guide, that, a recommendation. But we can adjust that up or down. And this is another area where sometimes, $75,000 currently seems like a very, very high figure. But when you start to think about, all the tables and chairs, or, desks, sheet music, it just, you never know if in your assembly, it's a very active choir that it grows into. I've learned, and I didn't know this. I stopped and talked to a choir director, and he explained that they had $75,000 in sheet music alone. So, you have to tailor it to your needs. And speaking of this, and this will sound like, I can't believe he's telling me this, but many don't understand the difference between building and contents. And I know this seems obvious. I pretty much understand that wall right there is a part of our building, and this computer right here is clearly not building in its contents. So there's some things that are clear, but in a commercial policy, any items that are used to heat or refrigerate or service, anything that's permanently attached or connected to the building is all considered building. That's important. I've just this last week, I had a congregation contact me and said, "Hey, we have really done some renovation that we feel like we need to update our policy. We got all new carpeting. We put a new floor in the kitchen, and we have all new appliances. And we spent $125,000, so we need to increase our policy." And sorry for my voice. I was telling Doug, I was at a basketball game last night, and I think I disagreed with the ref a few too many times. But if you're on a replacement cost policy, all the renovations that I just mentioned is what we're already taking into account. We're already assuming that we're going to replace it with brand new carpeting. We're already going to replace it with a brand new floor. We're already replacing your appliances with brand new appliances. So unless it was a true upgrade where, well, we've added a sprinkler system, well, we certainly didn't have that into our replacement cost. Or we took out the carpeting and added all new hardwood flooring, or something that was an increased cost, then we don't need to increase your policy. But many agents will just say, well, okay, yeah, well, how much was that renovation in the kitchen? You spent $125,000 on new appliances. Well, I'll increase your contents $125,000. Where first off, he didn't need to do that at all, and secondly, he increased the wrong limit. Because as I said, those items are considered building. So it's important that you're with an agent that understands and that you trust. I like the way Doug put it, that you choose a broker, to then the broker creates the competition, as opposed to having agents compete against one another or brokers compete against one another. Companies will only release one quote. Okay. It's not like you can, we represent multiple carriers, but if you would contact me and I provide you a quote, let's say through Grinnell and Guide One and Church Asset, or Church Mutual in Philadelphia, and then you contacted another broker and he submitted the policy, he or she, and the company would then say, "Hey, sorry, X or Y agent, we've already released a quote on this." So, companies won't release two quotes, so I think that's good. Competition is great. You want competition. You want to make sure that the agent is at your renewal, making sure that you're still with the company that's offering the best deal. And it's not always the same, especially when you're in a group like you are, where we have representation from Idaho and Iowa and Missouri and Florida and New York. Grinnell Mutual might be the best thing going in Iowa, where Guide One might be the best choice in Texas. And their rates go up and down. It might be a good time. Someone speaking earlier, I heard mention that, boy, over the last year or two, our rate has really, really gone up. And that has happened. There's been some trends and some reasons. The storm patterns, and I'm not going to get political here, and there's a wide variety of opinions of global warming and weather changes and things like that. What I do know is that hurricanes are clearly more often. We are getting significant more damage from hail, and companies are just pricing for that weather pattern changes. This last year, there were some individual carriers that got into a little bit of a different situation. Brotherhood Mutual was downgraded from an A excellent rated company down to an A minus with a negative outlook. And when that happens, AM Best rates all insurance carriers. They rate them for their reserves, their ability to pay claims, and they also just analyze their entire book of business and make sure that they're financially stable. And when a negative outlook occurs, they demand certain things. So you're going to see significant changes from that carrier. I'm not, dancing on any grave there. We've been through it with one of my carriers. Guide One at one point had a negative outlook. And they were in personal lines and doing life insurance, and got themselves in a little bit of trouble, and they got out of personal lines. They eliminated their life insurance product, really focused on their core business, which is insuring a church, and got their financials improved. But in that situation, we were delivering increases like one of the ladies on the call was mentioning. So that's one reason why you're seeing some of that. The Texas, picking on you here, Doug, that ice storm in Texas, that was completely out of nowhere, and it's costing all of us. That storm is hurting everyone on this call. It was an $18 billion storm, and not priced for. We know we're going to get a certain amount of fires in California. We know we're going to have a certain amount of a possibility of an earthquake in California or southern Missouri or southern Illinois. We know in Kansas and in Iowa, and we're going to have X amount of hailstorms or X amount of hurricane issues in certain areas of Texas and Florida, obviously. And they price for those things. But when something happens like that ice storm that was completely unpriced for, while you guys are a nonprofit, and I insure nonprofits, insurance carriers are definitely for profit. And so the pricing is going to be spread out. So we're experiencing, some of that as well. But I do predict that rates will be a little bit more stable from here on out, that's when you do determine your replacement cost, I would encourage you not to tell your broker that you want a certain amount of coverage. I would say, hey, you give me your opinion of what you believe it would cost to rebuild my building. And not that you should keep the current coverage from them. Obviously I ask for current coverage. That's how I can see that this congregation was insured for $672,000. But, so that's a reference that could be shared. But if you get a quote that's just exactly the same as what you had, you're kind of risking, if the prior agent was making the same mistake. And you do that over the years, all of a sudden you can find yourself in trouble in a time of a large loss. And if you do have a question, as Doug said, jot it down, because we're going to have a big period of questions that I'll circle back to, and we'll handle those. The next line you see underneath is called, well, you know what? Before I do that, there's a coverage called blanket coverage, blanket insurance, where in this situation where there's only one building, blanket coverage isn't that big a deal, but does add a benefit. In this scenario, and I don't have it added up, but if I wrote this risk on blanket coverage, the next line I would talk about, I'd say, okay, you can see blanket coverage. Currently, you don't have blanket, we'll pretend. And you can see I'm offering a blanket policy of $828,000. So you're not limited to the 701,000 on the church building, and you're not limited to $127,000 on the contents. You have $828,000 of coverage to go where it's needed. If you only have one building, there is still an advantage. As I said, contents are extremely hard thing to determine. I don't know that in this scenario, I don't know that $127,000 is exactly right. I'm fairly confident that 75,000 is low, but let's say that there was a small fire in just your church office, and it was a $20,000 loss to your building. Well, that's clearly covered underneath their 672,000. But if that fire caused smoke damage and it destroyed most or all of your contents, and maybe the agent didn't see that you had an unbelievable amount of Easter and Christmas decorations in the attic, or that one of the local businesses just donated, 30 laptop computers to your Sunday school, or maybe you have a preschool that you are Mother's Day out, and somehow the loss was $150,000 to contents alone. Well, if you have blanket coverage, even though I've only listed 127,000, you'd have $828,000 of coverage to cover that one loss. Whereas if it's limited to the limits that you see, your current policy in this situation, you'd be limited to 75,000 and out the other 75,000 and need to do a fundraiser or just not replace all your content. So blanket coverage can have an advantage with just one location, but it's a real advantage if your assembly grows to 3 or 4 locations, and you have a fellowship hall, and you have maybe you do open up a school or a K-8 school and have a parsonage and a rental dwelling. If that's the case, it's very powerful because you can add all these buildings together for one limit and coverage goes where it's needed. So that's how blanket coverage works. You're going to get, I believe Doug has emailed you or will send out a description, a lot of these terms that we'll kind of go over at the end, but there's kind of a description of coverages that will explain blanket, so you certainly don't have to take unbelievable notes here. The deductible, that's obviously, what the deductible is, that it's your responsibility in a claim for your portion of that claim. At one time, the standard deductible was $500 or $1,000. You can still get $1,000 deductible, but I will say that most carriers are really pushing towards $2,500 deductible now. And it's really in your best interest in the long run not to turn in the smaller claims. Although I talk with my contacts, and if it's something that's not affordable, you have a claim for $2,800 or $3,200, and you want to turn in, you would be responsible for that first $2,500. One claim is not going to really affect rate, but if there's a trend of claims, it can affect your individual premium. I know I mentioned the Texas ice storm, for instance, that affected all of us, but you also have your own policy that stands on its own 2 feet, and it's analyzed to see how profitable your own policy is, and premiums can be affected. But if we see a trend, you want to make sure, if you have a claim, what are the odds of that claim reoccurring, and why did it happen? Was this just a big one-off, or is this something that we can do? Are we in an area that is just lightning prone? Adding a lightning rod can really help to prevent that. So you also, there's a certain amount of risk management that's involved with insuring your building that your broker can help you with. The next deductible up is $5,000, and I typically will show you cost, and we just talk together about what's best for your specific congregation. In this case, if we move this church to a $5,000 deductible, it would probably be a savings of roughly $1,600 or so. It kind of pays for itself if you have 2 claims in a year. If you don't have any claims, we recommend for churches that are kind of risking a little by the higher deductible is to take that savings that you got from the deductible change. In this case, I said it was $1,600 or so, and kind of set that aside each year. And then all of a sudden you kind of have an account, a second year where you have $3,200 in it. The third year, you'd have close to that $5,000 deductible. And you kind of have financed for yourself a savings plan to then pay for the higher deductible. And it seems like a lot of churches will have a claim every other year, maybe every third year. Sometimes you go years and years without a claim, so you can benefit from looking at deductible options. On the contents, I'll just say, if you have a traditional church, and I know a lot of these are Doug has explained, newer construction, but if you buy an existing church that has the pews, or you built your congregation that way with pews, if they're screwed down, they're considered building. If they're loose and you can move them, and it's always interesting. It always seems like the last couple rows are movable and adjust for certain things, that you might do a wedding a certain way or a funeral a certain way and move things. If it's movable, it's contents. And pews are running about $180 or so per linear foot. It's very expensive. So, I know that 75,000 seems like a lot, but it can be exhausted quite quickly. Stained glass is another thing. If you have a more traditional type of building and you have stained glass or a pipe organ, those are additional costs that if an agent's talking to you or didn't see it, you want to make sure that you make them aware of the specifics of your church. And a good agent will ask the right questions and know. So that's kind of the main church building and how we determine, and some of the options that you have. The highlights there to me, the options are, replacement cost versus actual cash value. There's the basic, broad, and special. But if you just tell your agent, hey, premium is the most important thing. We have a very tight budget. I need to just satisfy the mortgage company, and I need bare minimums. Ask him for options, because sometimes it's not very cost effective. It's not very much of a cost to ensure you're building the right way. ACV versus replacement cost, sometimes it's just $100 or $200. It's inexpensive, but at a time of a loss, you could pay dearly for making the wrong decision. The indirect loss. So now I'm just kind of going to go through line by line here and kind of explain the basic policy, the things that we highlight when we present to a church congregation. Extra expense or indirect loss. These are for expenses that are over and above your usual expenses that are caused by a covered loss. And I know that's a lot of words. So I always like to define the coverage and then show you the limits and then give you an example. Earlier we said that there was that fire in the office that caused smoke damage throughout. And maybe you're not able to have a church service for the next week, or maybe a few weeks, possibly a couple months, and you have to rent space somewhere else in order to continue to have worship. That would be a cost that's over and above your usual cost that was caused by a covered loss, in this case, smoke or fire. If you do have a parsonage and there's a fire in the parsonage, we need to rent space for the pastor to live while we rebuild your parsonage. That would be an example. If you do have a Mother's Day out or a preschool or daycare, that would be where the tuition fees, you see loss of rents, tuition fees, violent events. I don't have any example of violent events. That I guess that would just be if an active shooter comes in, or again, damage to your building where we have to rent space from somewhere else. But the tuition fees can be significant. If you have 15 kids in a preschool and they're each paying X amount, and something happens to that space of the church and you're unable to operate, this would actually pay for that lost income of your tuition. Now, if you rent space from somewhere else, then we included in the extra expense that would be an expense over and above your usual expense that's caused by covered loss. I know I sound like a broken record when you do thousands of these things, you say the same things over and over. So there can be a combination of coverage here where, you rent space somewhere that, where you chose, maybe it's not in a safe area by parent standards, or it's now not on their way to work and not convenient. So you rent space somewhere that's an extra expense for us. But also, instead of having 40 kids like you had, only 25 of them actually make the move while you're rebuilding. That would be a loss of tuition and an extra expense. So it's an important coverage to have. Agreed value and coinsurance. I'm going to explain these together. Most agents don't like to talk about this because it's not the easiest thing to explain, but it is a definite pitfall that you want to be aware of. I've heard agents, it's awkward, but there's been times where maybe agents are presenting all the same night and we're in the same room with each other. And I've got to hear how agents are presenting if they present before me. And I've heard an agent say, what, you're right here on a main road. The fire department's right next door practically. What are the odds of you losing your full complete building? It's very, that is a little bit far-fetched. Or he may even say, I've been in this business for 15 years and I've never had a total loss. They're almost always partial losses, which is true. It's a true statement. But he'll say, so why insure for the full value? And in this case, now that I'm noticing, that's what they have done. This agent agrees with my value of $700,000, but they're on a 90% coinsurance clause. And what that means is that you as a congregation have agreed to maintain your building and your contents at 90% of the actual replacement cost. So 90% of 701,000, that's 630,000, I think. So in that case, they would offer $630,000 of coverage. When it's explained like that, that makes sense. You might be thinking right now, well, yeah, let's save some premium. I don't believe we're going to have a total loss. Let's lower our value by 10%, and help our premium out. But the problem with it is that if there's ever a partial loss, again, earlier I said that we had that $20,000 claim. And the adjuster comes out and he evaluates your structure, and maybe because of the crazy things like a huge ship is stuck in the shipping containers and all of a sudden there's no materials coming. A few years ago, we'd say that's really, really far-fetched and would never happen, just like we wouldn't think a virus would cause the nation to go through what we've gone through. But the unusual happens and the replacement cost is very, very high and materials and everything is exaggerated. And he comes out and evaluates your building and he determines that the actual replacement cost of your building is $900,000. Well, by contract, you have agreed to maintain 90% of that at all times. So 90% of 900,000 is 810,000. Well, you've only maintained in this situation 672,000. So what they do, even though it was only a $20,000 loss, let's just easier for me, and I didn't have this prepared as this example. Let's say it was $100,000 loss. Well, in a coinsurance policy without agreed value, they put what you did carry, 672,000, over what you should have carried, 90% of your actual replacement cost. 90% of 900,000 is 810. So now you have a fraction of roughly 6/9 or 2/3. And they take this fraction times your actual loss. And in this example, it was $100,000. So instead of getting a full $100,000 payout, less your deductible, you would only get about $66,000 because you failed to maintain 90% of your replacement cost. So there can be negative effects to doing it that way. It can be done right. you can have co-insurance at 90%, but in my scenario that I just went through, you would need to have $810,000 of coverage. You know, that way, obviously, they come out, evaluate 900,000. 90% of that is 810. You did carry 810. You should have carried 810. That is a fraction of 1/1 or 100%. You get the full $100,000. You know, so I don't feel that agents or boards understand that. You know, or your board changes and the past president kind of pushed for co-insurance, and the new president didn't understand and kind of adopted the problem and just is unaware. And it is not, to me, it's not enough of a cost savings to risk. You know, so what agreed value does is it waives the co-insurance penalty. It doesn't waive co-insurance. Okay, so you can kind of do it both ways. You can have agreed value, but then have a co-insurance of 80%. Or 90% or 100%. Those are the three options of co-insurance: 80, 90, or 100. Now, be careful also. I've heard people explain this poorly and say, well, we have co-insurance, but it's 100%. Well, that's even more responsibility on your part. Okay, because again, in my scenario, you did carry 672,000. You should have carried previously, I said 90% of 900,000. Well, now you're responsible for 100% of 900,000. So now you're responsible for you should have carried 900,000. So it's even a larger, well, I actually did the previous one wrong where it would have been over 6/8. So you would have got a little higher, but it can be, you know, so it's a larger penalty. So agreed value waives the co-insurance penalty. Any partial loss that's covered is completely covered, regardless of how your building is insured. To where, in my scenario, if the adjuster comes out, I have that $100,000 loss in our proposed column. The adjuster is going to leave and going to call me and slap my hand, saying, "Layman, you know, you have a $700,000 limit here, and the actual replacement cost is $900,000." You know, and he's going to complain to me that we're not getting enough premium for the risk, and I get my hand slapped. But meanwhile, you get your full $100,000, where a co-insurance policy without agreed amount, you kind of get your hand slapped and you get less of a payout. So that's, I know you probably think I spent a little too much time on that, but it's really a misunderstood. So at this point, the best way you can insure your building is with blanket coverage. Make sure you're on replacement cost, make sure you have special form, and make sure you have agreed value. Those are, there's just little, and those aren't company specific things. That's not a benefit of being with a certain carrier. That's you know, that's not a Guide One issue or a Brotherhood Mutual. You know, that's your agent and decisions that you make together. And there's decisions that you and your agent can make that will greatly enhance how claims are paid. And, you know, we choose to do them, but not always, but I'll make sure that it's at least explained so we can make the decision together. And it's not just making decisions because something wasn't explained to you or misunderstood. So if there's questions about that, man, I actually don't mind, Doug, if anyone has a question about that now, unless you want me to just continue, but that it can be a little confusing, but any questions about that, or should I move on?
Oh, people have questions, go for it.
So if you're
You know,
not doing co-insurance, you still need the agreed value?
Well, every policy will have co-insurance. Okay. It'll just be 80, 90, or 100. Okay. So what agreed value does is it waives that penalty, that formula of did over should times loss. Agreed value takes that and removes it. There are no penalties for being underinsured. Any loss will be completely covered. Now, the penalty, of course, would be if you have a full loss and the rare actually happens and it was a $900,000 loss to your building, I would be limited to 701,000. You're certainly still have a penalty for being underinsured, but the main point is that partial losses are not penalized. I've never known anyone to go through a co-insurance penalty on a partial loss that's been happy or felt like it was properly explained to them. You have years of paying premiums. Year after year, you pay your premium. You never have a claim. You finally have a claim and it's covered. It's a fire. It's obviously covered. You have a $672,000 limit and it's only a $100,000 claim. You're thinking, man, I finally have a claim. This carrier better respond appropriately. And then you only get $60,000 because you didn't maintain your building to some percentage that you didn't even know you were responsible for. So of our 4,500 churches, I don't believe any of them are insured without agreed value. We do have policies that have actual cash value or on basic coverage, but that's normally not your choice. It's normally the carrier's choice. Or the carrier might say, this building, this risk is not good enough to get agreed value, or it's not a quality risk that should have replacement cost. If I come out to and visit with you and I see there's shingles missing and it's a building that was built in 1920 and it's got a roof that was replaced in 1950, and I'm not going to be able to get replacement costs on that roof. It's going to be an actual cash value. So it's normally when I see if you send me your policy and I see it's not on special form and it's an ACV, my first thought is, okay, they have a problem. There's something about their risk that the insurance carrier wouldn't give them good enough coverage. Now I have found out that there was a risk. Now I'm remembering that the church was on one side of the road and they had a school across the street. And at one time they had a K-8 school with 100 students, but it over the years didn't grow well. And now they just had it for Sunday school rooms, and we were meeting in the building when I was presenting. So they had meetings over there, things like that. And it was written on actual cash value. And I said, man, this is a nice quality building. I'm kind of surprised you're on actual cash value. And they said, well, if something happened to this building, we wouldn't rebuild it. We would knock it down and we would make this a parking lot. We're using it because it's here, but we don't actually need it. So we told our agent, hey, let's just insure this on ACV and have a savings. And I said, so let me ask you, if lightning strikes and it causes a $50,000 roof repair, are you going to knock this $300,000 building down and make it a parking lot? And they said, well, no, we would replace the roof at that point. Well, and then I explained to them how ACV works and how that claim would be paid. And they were frustrated that they were on actual cash value. But they told the agent to do it, and the agent said, okay, and did it. But, so just make sure and I think this is why Doug is having this. A lot of this, you might have come in and many people that maybe didn't join today was thinking, man, I know how to insure our building. That's pretty simple. But as you can see, there's a few more decisions involved that maybe you thought. So any other questions about anything I've covered so far? Okay. The next few I go through a little bit quicker, and I know a couple of them we have already done, but regular glass and arc glass, that's just, I've seen policies that have a glass limit. They might have a per pane limit, or they might have a clause in there that states we just replace it with regular glass. And you may have beautiful stained glass that without it being covered in your building limit, your stained glass could be replaced with regular glass. That's a rarity. I very rarely see that. I have seen it, but almost all policies cover it the same way as I've listed here. You can see this is where we would typically talk about special form, including theft. So this, again, instead of being limited to the perils covered and having to find a way, how am I going to fit this water claim into fire, wind, lightning, hail, weight of ice or snow? Special form, it's covered unless it's excluded. And this might be a good time to kind of talk about the very last thing, since I'm on water. Flood coverage. Flood is excluded. You can purchase it. If you're not in a floodplain, I know that's ironic. If you're not in a floodplain, I can provide this flood coverage here of 10,000. You can get that higher. And people ask me, well, you just said I'm not in a floodplain. Why would I want flood? Well, sudden downpours that cause, you've seen kids running and jumping in these, puddles that are out on your property, possibly. If it rains so hard that the sewers can't keep up with it and water gets into your building because of it through a window or underneath a door, that's considered flood. You can see the next line here says sewer backup. So I kind of explain these together. We have sewer backup coverage. This company that I'm presenting here in this hypothetical situation includes it in your property limit. That's overkill. You're not going to have, a $701,000 sewer backup claim, unless, God told us to build an ark, so that's exaggerated. But a lot of carriers might have a $20,000 limit here, 25,000. I've had many examples where a sewer backup claim will exceed that limit, but when in my rainstorm example and water is seeping up through your sump pump pit and maybe it fails or, through your drains and damages air conditioning or a furnace or the drywall if you have a finished basement, that's all considered sewer backup. But when that water that's coming up touches the water that was also coming through a door or window, that whole claim is considered flood. And so I like to provide some flood coverage. And in this example, it was $10,000. So that's a little bit of the difference between sewer backup and flood. The next line you see is building ordinance or law. Very rarely talked about, but yet very important. I start presenting this a little bit more when I ran across one policy that had a $1 million limit here. And I didn't want to offer less coverage, so I asked for a quote for $1 million limits, and it was very expensive. I was really surprised at how expensive it was to rebuild that, to add that coverage. And so it caused me to look into it a little bit more. When something is more expensive, it's normally because they've experienced claims. So my example, I was an elder at our church, and when we built a building project, so I'm going to admit some fault here as well. I don't know if we were trying to save money or just didn't have the foresight to properly have a hallway outside our sanctuary. And it was about a little 18 or 20 foot hall. And we're in a fairly large church that really grew in our area. And we were really blessed and went to a second service. And in between services, coffee and donuts that you can imagine that area. It was just so crowded that people weren't staying and fellowshipping. And, we decided that, hey, we need to add on to the front of our building and make that space a little bit more user friendly. Well, we found out that we went over a certain square footage. There was a code or ordinance in our area that now that we were over a 25,000 square foot building, we couldn't add on to the building without adding a firewall or a division. And a firewall has a certain burn rate that it takes roughly like 3 hours for a fire to spread from one area of the building to the other, and has certain types of doors that have that fire rating and whatnot. And it cost us an extra $75,000 to put this firewall in. Well, let's pretend that that I, as a board member, push that we build it properly right away, and that we had this larger area to begin with, and then there was a loss. Well, now here I, as your agent or your insurance carrier, has promised to rebuild what you had. Okay, we're going to make it brand new, and we're going to do it as quickly as we can, and the same quality, and or if not better. But as you're going out and getting permits to do this work, you discover that now there's this new ordinance that a building over 25,000 square feet has to have a firewall. So it's an additional $75,000. Well, we as your insurance carrier promise to rebuild what you had. Okay. And when I determine your replacement cost up above of that 701,000, I didn't take into account that there's a $75,000 firewall. So, all of a sudden now we can't rebuild as we promised. But yet this is an increased cost of construction that we didn't know about. Well, this is where the coverage would come from. And the three limits, a little complicated, but if any of the undamaged area has to be knocked down because of a claim, this is where that coverage would come from. Because again, the policy states that we'll rebuild what you had. We didn't state that we're going to rebuild an area that wasn't damaged, but because now the code, we had to, you have some coverage there. You can see the demolition cost, or if there's an increased cost construction. Let's say that earlier we pretended you had a Mother's Day out or a preschool, and maybe now when we're trying to rebuild an area of your building, a code states that you have to have a sprinkler system, or maybe a building with you have a big cross up on your building and it's a certain height that now your local jurisdiction requires that a lightning rod be installed. Those are all coverages that would be added in because of building ordinance or law coverage. So this is a built-in coverage to most church policies. Chances are you'll have some limit. It's just sometimes the limits are very low. In this case, these are our base limits to where they had $100,000 limits, and you can see we have the 350, 350, 250. So, that's ordinance or law. Minister's business property, and then really we label this minister's business property, but it's really personal property of others. That $127,000 of coverage up above, you can see in this scenario, the current policy had $25,000 of coverage for your personal items, which in many cases is enough. Okay. But if you are a growing congregation and you have 3 or 4 pastors, this is $25,000 per occurrence. It's not $25,000 per pastor. So if a fire does occur and there's 4 offices damaged, and you have maybe your own personal laptop computer there, or you have a pretty elaborate library of books and things that you maybe had from seminary, or books that you recommend for certain people in certain counseling situations, and you have your personal items, we just want to make sure that they're covered properly, and so we like to make sure that they're covered in the limit from above of that 127,000 and not limited. I say ministers or pastors or clergy, it's because that's the most common position that has business personal property. But you might have an elder or something coming up doing work on a building and gets a toolbox stolen that was out on the sidewalk, or a tool belt, or anybody's personal contents that's used in the ministry, we cover completely. And that's covered in this policy is 25,000. The personal effects of others, you might think, what in the world is the difference? That would be, and you can see in this example, we were offering $25,000 limit where they currently only had 5. That would be maybe just a member of the church that was, or a visitor, and they hang up a fur coat and someone come, and at the end of service, it's gone, maybe intentionally or just by mistake, or, your office. I'm envisioning various offices on tours that I take that, I said your laptop, your library, any of your personal items that you use in the ministry, we automatically cover as church business personal property. But the Troy Aikman jersey that's hanging on your wall, that's autographed and framed, or an Ansel Adam picture, or some sort of a knickknack that's figurine that's valuable or something like that, those really aren't used in the ministry. That's just a personal effect. So that's the difference between those two. Property off premise and in transit, it's often a coverage that's not really thought about. You have a men's retreat where you'll take a men's group, or maybe your music minister or yourself brings a portable keyboard or a musical instrument, or any items that might be off the premises or in transit, whatever that could be. If you are having church in various homes or a Wednesday night service, I know our church, we call them E-teams for the men's group, or care groups for couples that meet. And if you use any of the church's contents in those situations, that would be considered property off premises and in transit. That in this scenario, the current policy had 25, and we automatically included 50 in this. Not totally important. I'm not recommending that you have 50 necessarily. This is just a built-in coverage that lowering it to 25 wouldn't save any money. It's what's kind of in the package already. Equipment breakdown. This is a big deal. It used to be called boiler coverage, and most new buildings don't have a boiler, but some older buildings have a boiler or a pressure system. And without mechanical electropressure equipment, we call it, it could be shortened. Some will refer to it as MEPI, which is just the letters, obviously. Without it, it only covers, the boiler. Let's say the boiler or the pressure system explodes and damages the boiler. That's obviously covered in property, and we replace the boiler, but it doesn't cover the damage that, put a hole through your ceiling or your floor of the main floor. So, unless you're going to put an elevator in, you need that, you need that fixed. But it's much more than that. Of all the claims we had last year, more of our property claims were covered by this endorsement than any other. Earlier I explained special form states that everything is covered except what is excluded. And the things that we can cover, I list out as an option. As I said earlier, earthquake, flood, there might be certain things that are in transit that you want to schedule on an inland marine. There's certain things that we can cover and offer you, but there's some things that this picks up as you read through your policy that nobody reads their policy. It's very confusing in legal terms, and it confuses both of us. But when you read through on your property endorsement, there'll be an exclusion page, and it's probably wise to read through those exclusions to ask your agent about. And one of them might be mechanical breakdown is excluded. Electrical arcing is excluded. MEPI covers this equipment breakdown covers both those things. I'm shocked at the number of air conditioning units we've replaced that if it's sudden and accidental, we cover it. It can't be wear and tear. Just like on your auto insurance, it doesn't cover your tires. Hey, I need new tires. There's no tread left. That's not covered on your auto policy. So wear and tear, aging, and just, an air conditioner could just be old. But if it's sudden and accidental. If somebody asks me about an air conditioning unit and hey, this stopped, and it can be pretty expensive. I get an adjuster out there and evaluate it. I'm shocked at what is covered. But if lightning strikes down the road and causes a power surge and blows out those 20 computers I said that were donated, that would be covered under equipment breakdown. We had an electrical panel melt down and there was never any flame, so it wasn't considered fire. It was considered an equipment breakdown. So it's hard to really do this coverage justice, but I would really strongly recommend that you make sure that you have equipment breakdown coverage, and it's on every policy that I've written. The next line I skip, that's specific endorsement to this carrier, and I'm not selling any certain carrier to you today. Everything that we've talked about are decisions an agent can make, and not specific to me and not specific to a certain carrier. All the carriers kind of add in bells and whistles, and there's just certain thing that Guide Advantage adds that we would explain if I was presenting that to you. And then you see lastly that we've already gone over the limited flood. Doug, can you bring up the next document that I believe is going to be the insurance terms or even the highlights? Okay, so you can see there's a lot of limits in a policy that we don't really present or talk about, but they can come into play when there is a claim. I'm going to highlight a few, but it's kind of an advantage of being with a carrier that it's a church policy. It's kind of just like I can't insure a grocery store very well. That's how I feel a little bit how American Family or State Farm can't insure a church very well. And I will say it's mostly liability, and that's a section that I do recommend that you guys go through. There's a lot of liability exposures that you lose if you're just insuring it as any other building. But there's also some property coverage that come into play. Fire department surcharge. If a fire department is called and they come out, sometimes there's a fee for that. If maybe it was a false alarm, somebody pulls an alarm and fire department comes out, I'll blame the youth on that. But sometimes it can be an immature adult. There you can see business income and extra expense listed. Monies and security coverage is something that is kind of automatically included. We adjust it later in a section we call crime, but monies and securities coverage, I've found many times I'll come out and a church will have a $17,000 limit for monies and securities, and here I am coming out with only $2,500, and they'll look at that as, what in the world are you offering here? It's really misunderstood. Most people are, an agent that's not a church agent may ask, hey, what is your weekly offering? And if they said 17,000, they'll write $17,000 of coverage here. But this is for actual cash that could be stolen, or items that can be turned into cash or have value, say stamps or various fundraisers like gift cards or things that you might be doing. But most time it's cash. And some people donate cash, or you might have petty cash, or you might have an event that creates cash. Maybe you have a fundraising auction, or you have a pancake breakfast that you have a little bit more cash, or a kind of a garage sale type fundraiser. On church policy and on the policies that we present, there's 4 days that coverage is automatically doubled that we typically name Christmas, Easter, maybe Thanksgiving. A 4th day that you can name your event, youth auction or sausage dinner. And then 4 days prior to the event to 4 days after, this coverage doubles to 5,000. But most people are tithing in check form or electronically. not going in cash, having too much cash on hand. I've never had that problem in my congregation. And it's just paying premium for nothing because the agent just asked the wrong question. So that's a coverage that's kind of included. Newly acquired buildings, you see in the midway through the policy there under coverage extensions, we automatically, some policies might only have 500,000, some 1 million. This example is 2 million. If you have a piece of property that you didn't tell the agent about, it was newly acquired and a loss occurs, we automatically have $2 million of coverage for 180 days. This is something that, it has occurred where maybe someone passes in your congregation and they leave you their home, and you didn't think about a week or 2 weeks go by, and it's just locked up, and you heard of the blessing that your congregation got, but you forgot to call your agent. It's for situations like that. Kind of funny. I've had trustees kind of think they're being clever, and they might have purchased a building or inherited a building, and they wait the full 180 days to call me because they want the free coverage. But again, insurance carriers are for profit, and they're going to find out the day that you acquired this property, and they're going to backdate coverage to then, and you're going to pay premium from that date. This is just for the slipping of the mind, and accidentally you didn't, and a loss occurs. So there's a lot of interior limits that are involved in the policy here, that each carrier will kind of have little differentiations and different limits here. The non-owned detached trailer, I'm kind of surprised how often I run into that exposure. It seems like a lot of churches have a trailer in their parking lot that they use quite often, that one of their members kind of donated or was borderline storing on your property, and something happens that we cover that for $5,000. So we try to think of everything to where you don't have a surprise to your budget, and that's how we insure it. The next page, Doug, I think is the insurance terms and coverage descriptions. Am I right? So here, earlier I explained that I open up my own policy, and it's this legal document that's an inch thick that explains things and the coverage detail that it almost feels like you have to be an attorney to truly understand. And they give you coverage on one page to exclude it on another page, just to limit it later. And one area it might say, and well, I know in your exclusions, you're going to open up your policy and it's going to say money and securities is excluded. They have to do this, especially if you're on special form where it says everything is covered except what is excluded. So they have to exclude it because they don't want to pay it unlimited without charging you. They don't want you to have all of a sudden claim that, well, we had $150,000 that mysteriously disappeared. Now, if you're on basic or broad and that money's gone, that wasn't fire, that wasn't wind, that wasn't hail, So that's an example of, if I can't find the exclusion, it's going to be covered. So on one of your exclusions page, it'll say monies and securities excluded because they want to provide a limit. And so they have to exclude it because special form would automatically cover it, but then later they'll add it back in coverage additions, because then they can limit it to the $2,500. So a policy can be confusing, and you can think, well, I don't have any coverage here because you didn't read on paragraph H-3 on page 66. It will add it back in for $2,500. So what we've done here, and I know my last name is Layman, but it's in layman's terms, to where you can kind of see, as an example, replacement cost for building and personal property, where it says replacement cost pays to replace damaged property with like kind and quality without any depreciation for fiscal. So it kind of explains it in a way, okay, I can understand that. It'll explain blanket, the agreed value there. It even gives you an example. You know, and there's I think, 2 or 3 pages of this. And it's even longer, you know, if we get into liability coverages, but, you know, so my point of adding that is just so if I said anything earlier that, you know, you didn't quite get, or you wanted to make a note on, that you wanted to explain to the president of your congregation or your board, or just a document you might refer to, as you go down the purchasing insurance, you know, road, something that can help you in that. So not quite sure how long I took. That's basically what we're going to cover today. You know, I'm obviously, I know how long it takes to present a church insurance policy. I've never only specifically talked to property without trying to sell you something. And, you know, I know Doug said that he can't recommend me and hasn't fully vetted me, but I can recommend me. You know, I'd love to give you a quote if you ever want a comparison, or just to see another set of eyes on your church congregation, to see, or if you want to just use me as a reference.
Incidentally, our renewal's up in April, and I just got a package from the company that does our insurance. It's no less than 100, probably 120 pages. I don't know. It's almost 3/4 of an inch thick, and I went through about 55 pages, double-sided, the other night. So I really don't know what this is about.
Daunting, huh?
Yeah, look at Louise's.
Yeah,
Well,
yeah. It's like-
That's why we're doing this.
It's guide 1 also.
Yeah,
There you go.
yeah.
Who's the agent?
Church Mutual.
No,
Yeah.
I meant the guide 1 agent.
Let's see, Williams, Turner and Mathis is who we get our letter from.
Yeah. Yeah,
And,
not familiar, but
yeah, our premium went up 17%. When it
and
normally
where-
goes,
where
goes
are
up
you?
6 and 7%. We're in Atlanta. Well,
Okay.
the suburbs of Atlanta.
yeah. Yeah, there 17% is probably, you know, that's a little higher than what I'm seeing in most areas, but not, you know, obviously it's there, it's guide 1. You know, a lot of carriers are also adding, you just reminded me of something that I meant to cover that I didn't, but percentage deductibles on wind and hail, or named storms.
That's what we're seeing.
Yeah, and that's pretty common now, especially on your own homeowners. Make sure you look on your homeowners policy for a couple things. Just first off, that percentage deductible, to make sure that a lower percentage isn't available. And then also a cosmetic endorsement, it's called. Is everybody back? Because this would probably be worth everybody hearing.
I think so.
Or the-
Okay. A cosmetic endorsement will state that as long as that, whatever item we're talking about, your siding or your shingle, is still functioning and not causing actual damage, it won't be replaced. My next door neighbor, he didn't know it, but the agent didn't do a very good job and didn't call his clients to explain what this endorsement that went out automatically on all policies. It said cosmetic exclusion. And we had a pretty bad hailstorm and had some holes in various pieces of siding, or sometimes you might see a roof as you're driving and half of it is black, or half of it might be an offshore gray and a dark gray or a light gray, and it's different, and kind of an eyesore, where companies with this cosmetic exclusion is only replacing the portion that's damaged. And his house looked like a candy cane, you know, because he they replaces the strips of siding that had holes in it, but didn't, and that's not right. Have your, even they replace it with white siding, but you know how it fades and things, and you could see where the new and old were, and to waive that cosmetic exclusion was $18 a year. And so it ended up costing him about $15,000 because the agent didn't explain that you can waive this cosmetic exclusion that went out in a mailing on your bill that I know someone just mentioned 150 pages, but even sometimes your bill was 8 or 9 pages, and it might say, Georgia endorsement, and it looks like just standard pieces of paper that have some legal meaning that you don't know what it is. You kind of skip it over and pay your bill. Well, one of them was a cosmetic exclusion. And, so that can come into play on a commercial policy also. The percentage deductible, like earthquake has always been written on a percentage deductible. Sometimes you can get a flat deductible, but in this scenario, on this $701,000 that we've been talking about, if you had a 10% deductible, it's not 10% of the damage that was caused, it's 10% of your building value. So 10% of 701,000 is obviously $70,000. You have a $70,000 deductible for earthquake. But hail, and I get it, almost everybody I know gets a new roof on their home every 7 years from hail claim. I don't know how insurance carriers can make any money in the home and business when you have a $500 deductible on a house and they're getting a new roof every 8 years. It's just, kind of silly. So kind of the answer to that are these percentage deductibles. So in many areas, there's a hail deductible that's being added that's separate from your all other peril deductible. And in this sample that we've gone over that was $2,500, it'll say all other peril $2,500, wind and hail 1%, or a named storm. For Georgia, you might have a policy that has a named storm and deductible. Definitely in Texas, definitely in Florida. Where if it's a hurricane that comes in that's actually named, it will have a higher deductible, anywhere from 3 to 5% deductible. So, pay attention to your deductibles and make sure that you get quotes for various deductibles just to see the cost difference, so you can decide on your own, what your congregation's financial situation to understand what you can afford and what you'd have to prepare for if you're hit by one of those examples.
So Dave, I want to ask a question. Let's just say that someone in this group or any others that we have an association with want to call up CAM, want to engage in the possibility of a policy. Are they going to talk with you? Are they going to talk with an agent? How's that going to work?
They would talk to me unless we happen to have an agent that is close to them. And so we don't have agents everywhere. We have 13 agents across the country, so we're not obviously covering everywhere. But it's amazing what we can do with technology. I shared before everyone joined that we just wrote a First Baptist Church in Olton, Texas. I wrote that. I can pull up on Google Earth. We have ways of measuring and determining your square footage just by pointing and clicking and dragging from one corner to the other. And I can see street views and your type of construction. Explore your website to see the pictures if there are inside pictures. But it involves a little bit of conversation between us where I talk about room by room, or we kind of do a mental walkthrough, if not a FaceTime walkthrough of your church. And, it's amazing. The virus kind of taught us a little bit. I think we all know we're doing things a little bit differently, and it's quite effective. So we write business all the time over the phone. but I think you'll be really surprised at how good of a job that can be done that way. So yeah, you'd call me. First thing I like to do is if you have insurance, get a copy of your current policy, because then I can fill out a lot of the applications without bothering you. But then we have a conversation where I make sure, and there's a checklist where I go through and discover your exposures, and we'll go through, I know what the first question is: what's the founding date of your congregation and the denomination, and roughly how many members do you have? What is your attendance? And we just line by line go through where I learn all about your church and provide you a comparison. and most people, the lady that said there with Guide One, and I asked who your agent was, it's very natural to have to read it. You haven't seen your agent. It's mostly done over the phone, even if he's next door. If claims happen, we have local adjusters, obviously, that come out and are in person. And I do try to visit whenever I can. I visited a congregation on that trip to California. I don't know how happy Angie, my wife, was, but I took a couple of hours out and visited a client, and I like to do those sort of things, and I provide my cell phone. I answer my phone. I'm very, very accessible.
So I have another question. You used a term, trend of claims. So peel back the hidden definition here for us. What does that mean exactly, a trend of claims? Is there some industry standard there?
No, and I will say, I'll try to answer this in a property way. Most of that seems to be liability, the things that hit me first. Certainly, hail would be something that just seems to be trending as these storms, again, I'm not a big global warming person, and I say I won't get political. I'm not, but there's definitely a change in weather patterns, and we are definitely getting more and more named storms that are causing damage. So that's undeniable trend. 10 years ago, I would say sexual misconduct claims were trending, and that is something. We could do a full seminar on an example like this, on just reducing the risk of sexual misconduct, and very important steps that your congregation can take, not just to protect your youth, but also to protect yourself or your adult workers from being falsely accused. And there's definite steps that are necessary and smart. But that was trending, so that was a big deal. My pastor called me one day and said, Channel 5 is starting their newscast in our parking lot. What do we do? And I have answers for that, and who should be notified? Who should talk to the press? What should we say? What should we announce to our congregation? That's all part of risk management. Now what's trending is employment practices, wrongful hiring and firing. It's just trending, it's things like that is what I was referring to.
Well, I think maybe I confused you with my question.
I'm sorry.
No, that's okay. I took it to mean that in a given year, you have several claims. And so the carrier views that as being a trend towards too many claims in a year.
Okay. That
So
could be the case
obviously, if you have a hailstorm, I would assume that's not included in a trend, but you explain how that's viewed by a carrier.
Weather is one thing. I mean, you can certainly, as I said, we get more tornadoes in Kansas than we do, or in Nebraska than other areas. So there's certainly can be weather patterns that are trendy, but your own congregation, you might have, there's if we see a repeat of claims within a congregation, we want to start to look, okay, what is causing this? The very moment that I try to do it on one claim, But if a second claim comes out, you know, why is water coming in right here? You know, what can we do to prevent this? And it can be a combination of property liability in that case. Why is water dripping at the entryway? And then if the weather drops, is ice forming right before, you know, on a Sunday morning when people are walking in? You know, what can we do to prevent that? Why are people, then there's a couple slip and falls. Could the carpeting be loose or wrinkled area and catching people's feet? You know, things like that, where you don't want multiple claims the same way. That insurance carriers start to think, okay, well, we're not going to keep doing this. You know, we're not, you know, we want this corrected, or we want off of this type. So I don't know if I'm answering that the way you wanted or very well, but
Well, what I'm really asking is, do carriers look at a certain number of claims in a year and say, okay, we're increasing the premiums, or we're not going to cover anymore?
well,
It depends on the type of claim.
sure. And they have actuaries, you know, that they analyze and they price and they predict certain things. And if those predictions are off, premiums are adjusted accordingly. And that goes both ways. You know, it could be, you know, boy, what we expected from this isn't happening. You know, and that goes down to your type of construction as well. It's funny, if you know, let's say that your building is frame. Well, that has a much higher fire rating, but it also has a much less expensive earthquake rate, you know, because it can bend with movement as opposed to crumble as masonry, you know. And so there's people much smarter than me that are analyzing all those things and making all kinds of adjustments. Even down to size of congregation. They might see that congregations that are below 50 members tend to have these types of claims, or certain denominations. A lot of buckets. It's MVP pricing, multivariated pricing. I've also kind of learned how to walk, you know, how the old joke is, I don't walk on water, but I know where the stones are. You know, there's clever ways to get a premium down when you start to learn how a company prices things. And if I ask a question that can have a range of answers, like I remember one year that I know if we wrote that they had over 100 members, it seemed to be a little bit of a price break, you know, and I would try to ask questions strategically. Okay, but what is your typical attendance? Well, 90 now. Are you counting all your Sunday school kids too? Well, probably not. So, you know, so maybe over 100. You know, I'm not trying to be dishonest, but you know, I also know that every dollar you spend on premium is a dollar that's taken away from ministry. And honestly, I'm commissioned, but that's really not what drives me. Any other questions?
Yeah, I have a question. Can you hear me?
Yes.
Okay, so a couple questions. You mentioned blanket coverage, and that's something you suggest or you recommend. Just basically, how much more is blanket coverage?
Okay, that's a good question. I had okay, that's difficult from state to state. Okay, and it's normally a percentage of your property premium, and you also don't know what your property premium is, because you see a premium that includes coverage for property, liability, crime. It's a package. But as an example, the church that I wrote in Texas, it was a fairly large church. Our original quote was $21,000, and they said, "Man, we've only budgeted 20. You're the least expensive quote that we have, but what can we do to get this below 20?" And I gave them a bunch of options, and one of them was to remove blanket. Their blanket limit was about $7 million. Okay, so it was 3 or 4 buildings, and it so this was a larger congregation, obviously, but to remove blanket, it saved them $1,700. I can't really answer that because it's just by state to state and county by county, but it's not necessarily inexpensive. There's a coverage called, most policies have inflation protection in them. Okay. And what inflation protection does is each year it automatically increases your building values at whatever the inflation rate was set at. But there's also a coverage called inflation guard that is on many policies that I like to take off and remove. And what inflation guard does is it provides inflation throughout the policy period. Now, the $18 billion storm in Texas caused some inflation in the middle of a policy period, meaning that the cost of materials went up significantly. So maybe we write your policy in January and it was $700,000 to replace your church. But then in June, man, it's actually more like $770,000 to replace your church. And that inflation in the middle of a policy period is not taken into account. You know, inflation protection increases your building by whatever the government sets inflation at, 3.4%. And that 700,000 would go up at that time. But inflation throughout the policy period would be covered by inflation guard. I've never had a very good example of that until this storm. You know, to me, that's far-fetched. My congregation doesn't have it. And it's 5% of your property premium, which is significant. You know, on that $20,000 church, I bet, it's not half and half. The liability is a little bit more expensive than property, but let's say that $8,000 of that was from property and $12,000 was from liability. So you'd get a 5%, it's a 5% charge of that $8,000. That's significant for a coverage that, you know, so sometimes it's percentages of your premium, but that same $20,000 church from Texas, I move it into the middle of Missouri. It's less expensive in Missouri to ensure that same exact risk just because of its location. So it's not really easy to answer.
Okay.
So I just encourage you to quote it, have them quote it both ways. And on the one building, if you just have one building of contents, it helps on contents, but it's probably not worth having. You know, I've never personally had a blanket claim only on one building. You know, so therefore, if it's just in one building, I think that's a risk that it's worth eating, if you will, and not paying for it.
So a second question, and I wish another elder who kind of handles the property insurance part of this equation is not here, but he'll be watching this video. But we have a approximately 10,000 square foot building, but we only occupy about 3,000 or 4,000 of it. And then there are rental properties. Businesses rent properties from us, and so we get rent. You know, so I'm not sure what our coverage covers. Like if it's just our part or it's the whole building. But is there something because of that situation that we have that we should specifically look for?
Yeah, that's a great question. So you own the full building.
That's correct. And we own about 1.5 acres that's just blank land in the back as well.
Okay, so your policy it's going to cover your entire building, but you should really make sure that you're getting certificates of insurance from your renters. Make sure that they have insurance. Make sure that they're naming the church as additional insured. Don't just get proof of insurance. To me, that's not good enough. You want to be named on their policy. Okay. So if you're, you know, whatever the name of your church, you know, we'll just say First Lutheran Church, you want that to be named as an additional insured, because if something happens there, somebody slips and falls, you know, in a lawsuit, they're not just going to insure, sue the renter. They're gonna name you also. So you want to be named. And then also it gives your carrier a chance to see what they're doing in that rental area to make sure they might have other recommendations of safeguards. So I would make sure that you did that. There was a second part of your question. Oh, the land. So how insurance works, and that's a good question, because if, let's say you put a little 2-car garage out there on that land for storage,
Mhm.
okay? On our policy, we have a coverage called appurtenant structures for $50,000 of coverage that it automatically covers outbuildings like that without even naming that location. But you have to, when you insure a building, you guys can see me, right? I'm talking with my hands a lot. When you insure a building, liability automatically extends to anything that's connected, any land that you own. It's where earlier when I said that church that had the building across the street, they're gonna knock it down and make it a parking lot. Well, if we only insure the church and it's not contiguous and it's not connected to that land, in that scenario, a road divided it, liability doesn't extend to across the street. Okay, and also if you have a 2-car garage across the street, that coverage doesn't extend. Appurtenant structures doesn't extend. We named premises 1, building 1, and its land that's connecting to it, any outbuilding that's on that land. So in your case, if you had a 2-car garage and we felt comfortable that $50,000 was adequate, we don't need to list it or charge you for it, automatically covered. But if you put a 2-car garage across the street, we'd have to do one of two things. We either have to list that land as a liability only location, 1.5 acres at Elm and 3rd Street. Then appurtenant structures coverage is included because we listed the land. You guys mind holding on 1 second? I'm getting a call and I know it's because I'm in the building. Don't worry about it. I'll text him. There's probably an alarm, let people know, and normally there's not anybody here on Saturdays. So I'm saying in building and on call. So do you understand that you have two choices in that scenario? Either list the liability location so appurtenant structures covers expands to it, or we could list the garage as premises 2, building 1, $38,000 garage, and then liability extends to the land that it's connected to. So it's kind of a two-way street, no pun intended, on how that would work.
In this case,
So-
the 1.3 acres is in the back of the property and there's nothing on it. It's just,
But it is connected to the land you own that the building is on.
yes.
Yeah, so therefore you have liability, which is important. But if, let's say that there was, you had that 1.3 acres that was down the street and there was a home in between your church and the land you owned, you would want to list that location as a liability only coverage, because
Okay.
some kid could be walking through and they fall in a hole and break their leg and a lawsuit comes against you. You'd want coverage.
Right.
But
Okay.
I think what you're saying, Dave, is that this is property by property, plot by plot. Is that correct?
Well,
It's not necessarily a street dividing it, it's because it's 2 different lots.
if those 2 different lots are touching each other, liability automatically covers on the one building.
Oh, it does.
But if there's land dividing it that you do not own, we
Okay.
need to then address it as a second premises.
So if it's discontinuous, then you have to insure it separately.
Yeah, so if you had
Okay.
commonly you have a church with a parsonage next door. The
Yeah,
church would be premises 1, building 1. The church would be premises 1, building 2, because that's one premises connected,
Okay.
even though they have separate addresses.
okay.
If there's a home in between, church would be premises 1, building 1, parsonage would be premises 2, building 1.
Okay. Sorry, Craig,
So-
I interrupted.
No, that's a good point. Anybody else? And there's no stupid question, obviously. And we're at the end of the time too, so I'm not trying to act like you have to have a question, so. Maybe I was so brilliant that now you're all exceptional insurance agents.
I have a kind of a generic question. So about a year ago, I started saying, you know, we need to really look at our insurance needs. We've significantly changed. We've downsized over the last couple of years. We're not doing, we don't have kids from the neighborhood coming in for Awana. And so it's kind of just our small group meeting on Sundays. And we have a new thing where there's a homeschool group that meets in there once a week. All right, and some of the believers that are nominally members of our assembly are part of that group. So they're kind of sponsoring it. So they're there. So we want to analyze our insurance needs, and like I said earlier, it's like I have a 3/4 inch thick sheets of papers here that was just mailed to me about our policy. So I look at that, and I read the first 50 or 60 pages the other night, and I said, this means nothing to me. You know, and I understand exclusion. You know, a lot of things you covered were discussed there in terms that certainly any good lawyer would be able to recognize. I'm merely an engineer. I don't understand all that stuff. So anyhow, where do you start? So I feel like almost we need to start with a clean slate and say, just have somebody come in and say, what do we need to do? And what should we have here? Because the folks that set up this policy are dead.
Right.
There's very little continuity in the leadership at the assembly right now, other than I've been there for 30 years as elder. So that kind of thing. We don't have the people that used to look at the insurance and set this up. They passed, and the fellow that was in charge before, he's not around now either. So where do we start? What would you recommend? I mean, certainly we'd say look at the existing policy, but I feel like it's not representative of the last 10 years. Maybe.
No, and that's
That's a big question. Sorry.
no, I hesitate because I know this isn't about me promoting me. Okay.
Sure.
I'll just say the way I handle it is sure, it's helpful to have a copy of your current policy because it might really lead me to certain questions. Yeah, I've seen coverages that are not necessary. You know, I'll be like, do you have a skateboard park? You know, no, okay. You know, there's coverages that I see sometimes that are no longer needed, and that is discovered in our quoting process. Without you telling me, I would have known that you have that group meeting in your church once a week. You know, unless you lie to me, you know.
We try not to do that.
So a church can get an indication. There's a difference between an indication and a bindable quote. And I don't do indications. It's easier, it's quicker, it's probably better for the agent in that they feel like they don't waste their time. An indication, you know, you can give me your current policy and I could give you an indication of what we would cost if I insured it that way. But I don't know that I'm gonna insure it that way. You know, your risk does change. Things change, things become different, priorities change. The previous board might have really stressed having flood coverage where the next board might not have. And, you know, and this might not be current, just as you said. So, you know, we will ask, where do you take mission trips? When's the last mission trip? What countries did you go to? All those questions mean something. And I know, Doug, a lot of these questions are liability. And I kind of insinuated to you that they would be. Liability is very, very important. But, you know, if you don't insure your liability properly, you can get yourself in trouble and unable to pay your mortgage. You know, I mean, so they certainly go hand in hand. But I complete an application and it's going to be a bindable quote, meaning an indication if you said, hey, Dave, we want to go with that indication, that premium looks great, we love your coverage. Well, then all of a sudden I'd have to ask you, how old is your roof? When has that been updated? When has the electric been inspected? How many people handle or count your money? How many signatures are on church checks? Where does your youth group go? Do you rent or lease space to anybody? Oh, you do. Tell me about them. Do they provide you a certificate? I mean, I don't want to scare you and like, oh gosh, I don't want to talk to this guy. He's going to take forever. But it's about a 15 to 20 minute application. And that's if there's no back and forth talk like that. We get off on tangents, which I'm a talker and we do, but it's your church, your assembly is worthy of insuring properly. It's worth the time to make sure that parachute's going to open. That's how I kind of look at it. You don't really think, most congregations don't worry or think about church insurance until they have a major claim, and then, man, you've already been dealt that hand. It's just, let's show your hand and see what you have. So we'll complete the application and discover those things, and it might open up other conversations where we have more conversation and make sure you're insured the right way.
Okay.
So the first step is just, let's just give you a comparison, and there'll be recommendations. You'll get a second set of eyes on how we believe your building should be insured, what we think the costs are, and what coverages do you need? What risk are you okay with self-insuring, and what risks do you have that are transferable? Which is that's what an insurance policy does. It transfers risk from you to an insurance carrier. So that's the good start. And then certainly if I don't ask something that you think I should be aware of, then we need to know about it. It's not always a charge. I think some people worry that, boy, if I let him know that we have a homeschool group out of here, that's going to cost me something. Not necessarily. It could, but our liability extends to any ministry of the church. If it's not your ministry, I just had a homeschool group that the church did lead. There was a little bit of tuition that they collected. There was a staff member on their staff and staff member that was leading the homeschool group. And that was covered. That homeschool group didn't need their own policy. Some of them may need it, but that's something that we would discuss through just kind of the discussion or the application process.
Okay, thank you very much.
Uh-huh.
I think you gave me a good general idea what to think about. Appreciate that.
Yeah, just going through it and telling and asking questions. A lot of times, if you whatever accusation or claim that you fear or think could happen, you just need to ask your agent, hey, if this happened, how would my policy respond? And that's kind of an eye opener.
Mm-hmm.
Anything else?
No.
Okay, well, if there's no other questions, then we'll close up here in a minute. I want to thank all of you for taking your time this morning to join us. Especially want to thank Dave. I don't want to leave you with a false impression that we're not pro Dave here. We think he provides a great opportunity for you to explore the possibilities of them providing coverage for you. And so we want to encourage you to get in touch with them if you think that they can help you. And I think you'll probably get some phone calls, Dave. We will, I think, probably work towards a liability presentation because we know that's a huge area today. And obviously some of these questions kind of border on that anyway. So I'll get with Dave, we'll talk that through and see if we can't find a date in the future when we can do this same thing and address liability issues.